Hey guys, Sam here. Thought we'd do the same sort of update analysis on Ethereum as well, and then we'll move into some of the altcoins. But let's stick with the two bigs. So we have a slightly different count on Ethereum. Because of this completed fifth here, we've been operating on the premise that we have a truncated fifth, right? We didn't get quite to a new high, but we have a completed five-wave sequence. And now, of course, we're starting the correction, and it's unknown as to whether or not the correction is over and we're into a new impulsive move, or whether or not the correction is still underway. Right? So much like Bitcoin, we've got to just try and use wave characteristics and statistical probabilities to see if there is a trade that we can set up and position in the market with low risk and high potential reward. Can we do that? Okay, so of course, if a five-wave sequence is complete as we have it in our primary count, then we're retracing the entire move, right? From absolute low to absolute high, and where do we go? Okay, I'm hoping that that's not a surprise to any of you at this point. We go right to the 50. Boom. There's our reaction. Okay, so if that's the low, if that's a valid swing low, we can work from that low, then we've got to see if we can quantify it with more than just the fact that it ticked the 50, right? That can very well be enough, and I promise you that was enough for the algos that bought it there. But for us, can we be a little more nuanced and look for more certainty, more probability in terms of where we enter the market and use some of the advantages of Elliott wave theory to get position into the market? So if indeed that's a good solid low and the correction's over, then we would have this scenario here. Then we can label this, and I promise you a lot of people, a lot of Elliott traders have that wave wave labeling, and that is their primary count. So how can we absolutely know that we have a solid low? Well, we can't at this point, because until we get an impulsive characteristic here, until we get an external retracement that implies a third wave and that a 2 is in, a shallow 2 is in, we can't quantify this, because this could possibly be, very possibly, much as we looked at with Bitcoin, this could be setting up for this. Let me put that in a different color. That's possible. That's very possible. And if that were the case, then all we're doing is putting in the B wave here. And B wave can go beyond the 618. If you were just being methodical about this and selling every swing, you could make a very real case for a sell up in this zone. Very real case. Could likely happen. We don't know. So how can we, with a bullish bias, how can we reduce that probability if we're looking for a place to get long, and use some of the nuance here to see if indeed our primary count is right, but we've got to be aware of the alternate count, and knowing that, pun intended, that the wave count is fluid, it's constantly changing, we are only able to look at probabilities, we have no certainty, we have to always be willing to adapt to what the market presents to us. So this is a very real possibility, and right. I mean, look where we've gone. Right to the 50. We're wicking through it, but we're getting a reaction. And I absolutely promise you, there are algos that are written to just sell that 50, and they're looking for the move down to the negative 23, which happens to coincide with the 62% of the entire wave structure. So that's a very, very real possibility. Just as a straight swing trader, you could be short now. You could be short now. Perhaps you front run it by a few, and your stop is there. Very valid trade. And if that is the case, let's just consider it as a short trade. Looking for the negative 23. Let's say we're stop at the 65-ish. Over 4 to 1. Over 4 to 1. Very valid trade. Very much so. Very real possibility that that's the potential wave count. Am I taking that trade? No, I'm not, because I'm bullish crypto and I'm looking for the buy side. Does that make me right? Right, just that's my bias. And so I a lot of times I will speak that out loud to you guys to acknowledge it to myself. I know I have that bias. I know I have it. So I want to be conscious of the fact that I could be that could be clouding my judgment when I look at the market. So part of the benefit of doing these videos is that it solidifies in my own mind all of the possibilities, because in teaching it to you, I'm trying to make you aware of mistakes that I've made in the past. So looking at this, right? So somebody sold it. I guarantee Algo's sold it right there, and they're looking for this. So how can we, if we're looking for a new trade? Well, that's the first one. If you're willing to get short on that, that's your first trade. You're in it now. If you've drawn this yourself, if you're looking for the bull side, where is our next trade? Well, I'm going to take this off just to clear up the chart a little bit, and I'm going to take some of these off because we are now to and through. If we think we've got a good pivot here, which you can certainly make the case that we are, given this structure, we remain bullish. Really, we're bullish above the 618. 155, we are bullish above, respecting the larger trend and the fact that we have a completed series. We've retraced 50% of it. Now we're looking for a new impulsive structure moving high. Well, how can we quantify that? Well, we've got to go down to a smaller time frame. Let's go to the 4. And here it's a little bit harder to see, because what are we looking for in that C wave? We're looking for a 5-wave sequence. We've got the 3 here. Here's the 3. If you recall from our basic Elliott trading and training, we've got a potential 3-3-5. So here's the ABC of A. We get a weak, but it's there. We get a 3-wave B, and now we're going into the 5th. Well, it's a little bit harder to see. If I'm looking for a 5-wave here on the larger time frame, I might see this. See, that was the count that looked valid at that time. Yeah. Okay, so look what happened here. So this was very real, and this is why the count is potentially becoming invalidated. So we had the 1, the 2, the 3. Here's the 4 that respects the wave 1 low. It does not go beyond it and invalidate that impulse. We get the reaction. Look on this 4-hour. What do we have here? We went right to the 618, right to it. So absolutely, that's a valid trade. Absolutely, you've just been stopped out. And take note that this is the challenge of this, right? You're stopped out wicking the 50. But if you got to stick to, this is an important point. If you're trading on the 4-hour, you place your stop and you continue to look at the market on the 4-hour. This is a mistake a lot of people make. It's very tempting to move back or down in a time frame to accommodate your bias. If you put the trade on via an analysis of the 4-hour, you place your stop according to that same analysis. You have to maintain a discipline there. Otherwise, you will continually expand or contract the time frame to accommodate your bias. And that is almost always going to get you in trouble. So if you're on the 4-hour, you were taking it off of that wave count, you're stopped out. Oh, coincidentally happened to be with the 50 of the larger. You have to have some rule set. Otherwise you're continually moving and adapting and changing, and that will lead to increased risk, a lack of discipline, and you'll end up getting hurt when you are moving a stop to accommodate a bias on a larger time frame, and you will regret it. You're much better to say, okay, I'm stopped out on that count because I've wicked the 786. I was working off the assumption that was my wave 4 and that I was heading down to new lows. That's invalidated. I'd much rather be stopped out, reevaluate, take a breath, let the market show its hand. Perhaps we're off to an impulse. Perhaps we're just wicking the 50 of the larger. I'd much rather take the small loss and re-enter the market and continually quantify my risk reward with the discipline of letting the stop take you out if you're wrong. The first time you evaluate the market, that stop is there for a reason. Don't move it. Don't move it. Words of wisdom, I can promise you I've made the mistake many times, which is why I take the time to re-emphasize it to you. All right, your count is invalidated. Now, it could, I mean, there are circumstances that there in Elliott there are guidelines, so we have the possibility for an ending diagonal, but it's becoming less and less likely. An ending diagonal would allow for the overlap of the wave 1, but we're looking for characteristics. So this is becoming less and less characteristic because of the depth of that move beyond the wave 1, less characteristic of what could be an ending diagonal. But because of the nature of the 3 here, this still implies corrective behavior. Right? How do we confirm the correction? Well, we'd have to come down and take out this low. But at this point, just looking at that, knowing, okay, market's trend in 5s and correct in 3s, that's a pretty good looking 3 right there. Okay? Certainly you could make the case that we've just got an ABC. So back to that alternate scenario, which is here, that sure looks like that's a contender. That's a contender. A 3-wave B. Remember, it was not quite. Look at the difference between that B, that very clear 3 into that B, and this we'd have to squeak down to a smaller time frame to squeeze out a B. Not as clear. Not as clear. This very clear. How do we know? How do we know? It's got to keep going. Let me take some of this off. I'm going to take this down. Okay, so let's go down to even a smaller time frame. Remember, it's always the fractal nature of the wave theory. It's waves within waves. Waves within waves. Okay, so our premise is that we've got a good low here off of this 50 in the larger time frame. Well, if that's the case, we've got to be able to see a 5-wave structure into this C count. Right, so here's where we're looking at here. We do not have a very clean 3-wave in the way that we have a clean 3-wave here. But coming down, we could certainly pull that aside just for a second, just to clear up the chart. We could certainly make a case that we've got some sort of 1, 2. It's not ideal. We'd be down into a 3, 4, 5. Possibly, or we could be looking at, if I take this down here, let me reset that. We'd have 1, 2, 3, so we'd be looking for 5 in here. Can we get 5 in here? Well, there's 1, 2, 3, 4, 5. Yeah, we can make that case. We can make that case. Now let's look at our wave characteristics and probabilities. Wave 2, shallow. We front run the 50, but we get to the 3.8. Okay, that's valid. Okay, we know that wave 3 cannot be the shortest wave. So if we go to our alternate tool and we look for the 100% of that move, we go to that low from that high. Oh, we just get through it just by a few dollars. So a valid wave 3. Valid wave 3. Okay, so we know that's clean. That's a possibility. How about the wave 4? Does that work? Wave 4. Look at that. Right between the 38 and the 50. Perfectly valid wave 4. And we come down and take note. We go right to the negative 23, which we've got a little window here where we get the negative 23 and the 50. There's your buy zone. Off of that low, if you were looking for the rationale into that trade. You've got the 50 on the larger time frame, and you've got the negative 23 on this pull into the 4 coming down to our target. Okay, so as to what we have over here, what we're looking for, this could be A, B, so this could be our B. So we'd have this. Not ideal, but possible. 618, and then we get the drop. Okay, possible. What we're really looking for is, can we quantify 5 waves here to validate a C wave? And we get that. So let me declutter the chart here so we can see some of this. We don't need that. We've got this 5 wave. So if that's good and we're coming up, well, what's the first thing we want to do to see if we can validate this move? Well, we come, not quite to the 50. So we know approximately 15% of the time, 12 to 15% will be to the 38. We don't get the 50. Maybe it's a front run. Well, we can look at that and say, well, this certainly looks corrective. This certainly looks corrective, right? We've got a nice 3, A, B, C. So if this is our potential roadmap for bulls, that's a 1, 2, then we're off into a 3, 4, 5, just like we're thinking as a scenario for Bitcoin. So if that's the case, well, we just, let me get this out of here. Now we're going to draw from this low. Does that qualify? It's shallow. Again, much like this one was shallow. We don't quite get to the 50. Ideally, you'd want to see it get to the 50. But it's certainly valid. We've got a nice little ABC implying a corrective action. It's front run off the 50, and now we're off to the races. Well, if indeed this is impulsive, well, one possibility here is that that's our one high. Another possibility is that we're doing this. Here's another possibility, that we're going to do this. How do we know? How do we know? Well, all we can do is go back to our statistical analysis. Right now, because of that 3 wave here, implying corrective action, and this looking potentially impulsive, all we can do is look at that and go, all right, well, where's the statistical probability if that's a 3rd wave? Where do the odds tell me that that's likely to go? Well, we can go back to our wave ratios here and go to our wave 3. You'll recall these. 75% of the time, 75% of the time, we're going to go between 1.618 and 2.618, or 162 and 262. So looking at that, going back to our market, right? We go to our alternate tool. We go from this low to this. I'm going to take some of this off to declutter. Here's our sweet spot. That would be likely target for the 3. Do we get there? There's no way to know. Now we're on a 1 hour. Now we're looking for a case. Can we build a case for impulsive characteristics in that 3? Waves within waves. We'd be looking for an impulse wave in that 3. But first target right now, sitting here on an hourly, would be we've done an internal retracement between the 38 and the 50. We're moving higher. We've gone external here. We're wicking at the 50, right? We got to be aware of that longer term trend, but our very long term trend, our premise from this pivot being a good low, is off of this 50. That's the premise. We've got that 5-wave sequence down. Here's a 1, possibly a 2. Can we quantify it? No. At the very least, we got to get here. We got to get 100% because we know wave 3 can't be the shortest wave. So at the very least, it's got to put in 100% of wave 1, which happens to be right here, which is where we're likely to hit a little bit of resistance. Likely to hit it. That's our target. Do we have a trade now? No. If you're not in, if you didn't catch this or this, valid, there's the 50. If you didn't catch this, would the oscillators have been helpful down here? It's not perfect. It's not perfect. Market's never going to make it easy. The 1, 2, 3, that gave you some advantage. Maybe on a smaller time frame, if we went down to the 30-minute, we get some help from the oscillators. Yeah, now we're looking good. A, B, C. It's a little shallow. I'd have been looking for the 50. But once that starts to rip up, possibility you could catch that. Let's go back to the hourly. Where's our next trade? Well, just like Bitcoin, we've got to wait. We've got to wait. Unless you want to try and go down to the 15-minute and try and catch the potential 1, 2, 3, 4 of this. That's valid if you want to go down to that time frame. Tighter stops, tighter rewards. But really what we're looking for now, if indeed this is our target up here, we're looking for this. we're looking for that to come down between the 38 and the 50. 38 and the 50. There's our buy zone. But we got to wait. We got to wait. Got to wait for it, for this to show itself, because we've got the potential that, of course, with that alternate count that we're heading lower. We would like to see the market shows its hand here with that strength, implying impulsive motive wave up to the 618.75. We know that that's the majority of wave threes. That's where they're going to turn. Profit taking, those that caught the 3 taking profit here. We come back down to this shelf of prior resistance, just like Bitcoin, just like Bitcoin. That shelf becomes the support. Here's our buy. Here's our buy. Looking for new highs. Looking for new highs. Excellent risk reward. All right, guys, I'll wrap that. Back with some alternate coins a little bit later today.